This is Bruce for Spartan Capital Markets, taking a look at the weekly technical market report for Sunday, April 30th. I'm going to go through this pretty quickly just for you newer traders or those of you newer to technical analysis, just to give you some context to help. Hopefully that'll help a little bit when you go through this. So the first we have here, the coverage is the Aussie dollar, and we have a breakdown of a bear flag in the Aussie dollar that occurred last week. Sorry, I'm just going to zoom in here. Okay. Oops. So you can see how we broke down from that last week and we closed below it. So the expectation would be a continuation to the downside. Some levels are marked, the key level down here. And that means that any kind of bounce or counter trend rally can be looked at for bearish reversals to potentially enter for the stronger force, which is down at this point. Now, you remember the Aussie dollar has been chopping around in here for quite a bit of time, causing some frustration, I think. And so this is really the first time in a couple of months that something has become clearer. Next, we move on to the euro dollar. The euro dollar, we had this high here, and we broke above it a couple weeks ago, and then we broke above it again last week, but it has not, the euro dollar has not been able to keep trending higher. We have a potential double top, therefore, which breaks down here in the center. And if that happens, then we could see a retracement down to one of these Fibonacci levels, keeping in mind that there's also support of this uptrend line. So I would expect the uptrend line to hold any type of pullback because that is a long-term developing uptrend that has now triggered a continuation. So we need further confirmation of this. If we do get it above last week's high, then the euro dollar could take off at least to this next zone up here. So there we have the euro dollar. The trend continuation expected unless we break below last week's low. Then we move into a deeper retracement. Excuse me. Then we have the euro yen. Euro yen, very interesting what's going on with the euro yen. This is a monthly chart. You can see how we are breaking out, not only breaking out above the previous swing high, but also closing on a weekly basis. On a monthly basis above that swing high. So that's very bullish, and you can see how we have a wide range green monthly candle. So the expectation on the euro yen is that we are continuing to trend higher, and we have a bullish outlook. So let's look at the next chart on this, which gives us a little more detail and includes a number of targets, and these targets become more realistic given the monthly chart. The longer the time frame, the more significant the pattern. That means the more significant the breakouts and the more significant the potential support and resistance. But we broke out, so the sky's the limit at this point, as a figure of speech. So as we take a closer look here on the weekly chart, we broke out of this symmetrical triangle 3 weeks ago, and we closed up strong. So this is when I may say use the term decisive breakout. This is an example of a decisive breakout. In other words, when it happened on that week, there was no doubt that we broke out and we closed strong, and subsequent price action supports that analysis. So that's why I say decisive, because we have the potential for decisive follow-through or a clear follow-through, and that's what we have here. So the breakout was clear, and then the follow-through was clear as well, and that's equally important because it allows us to take advantage of the trend for a longer period of time. Even if we're getting in and out, it still allows us to take advantage of the trend. So we broke out here, then we confirmed strength by breaking out above the previous swing high as well. And so if we're looking at targets, the first target is derived here from the measured move. The measured move is taken from the beginning of the trend and an impulse move at the beginning of a trend, and essentially an impulse move for a sharp, clear, aggressive trend that tells us the buyers were clearly in charge, and there's a clear imbalance between supply and demand at this point, which is why price is increasing, because the buyers have to pay more and more in order to get something. In order to be able to buy anything, you have to keep paying more and more. And so then we had a period of consolidation. And so you can think of this as the seed move. It's like the seed of this uptrend. And so now we have a new breakout, a new sign of strength. And so if we take this first measure move, project it from the recent low, we get a target up here at 156.56, I believe, somewhere around that. You'll see in the write-up of what the specific price is. And that target is interspersed with some lower Fibonacci levels, also to keep an eye on, because just because everything is bullish doesn't mean we go right up to that target, of course. The target is the least reliable component of the analysis. It gives us an idea of where price may be going. So that's a nice target. So then the other target, which lends credence to this measured move target, is a target derived from the symmetrical triangle. In this case, we're just taking a classic measuring objective. It's called the measuring objective in technical analysis, where we take the distance between the two lines where they both exist. What that means is that over here, the top line did not exist. So the distance from where to where, there's no top line to measure from. Once the top line exists and the bottom line exists, we take that distance, we add it onto the breakout level over here, and that gives us our target up here at around 158.93, 92 or so. So what this tells us is we have some nice upside. So the stronger force for the time being in the euro-yen is up. That's the important thing to keep in mind. And remember, that means you want to watch retracement, because they're going to give you, whether it's intraday in a 5-minute, but especially on an hourly or 2-hourly, a 30-minute, 4-hour retracements are what you want for potential continuation in the euro-yen. Then we have the dollar CAD. The dollar CAD is remains stuck within this consolidation. However, it did recently find clear support here at the 55-period exponential moving average. That means that if we come back down, that's also an area we want to watch for support, because the market is confirming that line, or that it's, in a sense, recognizing that line. So in the near term, though, what we have here is a potential bearish shooting star weekly candlestick pattern. You see how price went higher, found resistance at this zone highlighted last week, where the convergence of the 62% and the downtrend line happened, 62% Fibonacci retracement and the downtrend line, and price was immediately rejected from that zone, i.e. resistance, to close near the low of the range. That's bearish. That means that bearish sentiment may come into the next week, next 2 weeks, next 3 weeks. And that's what the shooting star is telling us. So a break below last week's low is bearish. We're probably going into a deeper retracement. That's what that tells us. Moving on to Hathaway analysis put together by Scott Hathaway. The charts by Scott Hathaway, where we have some pretty sophisticated analysis that where I'm just going to talk about kind of what it's telling us primarily. And I do write a little bit more about it based on some of Scott's notes, but it gets complicated for most people, including myself sometimes, to be honest with you. The important thing is what it's telling us, because it gives an added layer of analysis that is connecting current and future price action geometrically with a previous price action. Okay, so it's potentially very powerful. And here in the first, we have the S&P 500, which is where Scott is using his parabolic channel grid analysis and creating. You can see how a grid is created: 4 horizontal, 3 horizontal, 1, and so forth. And then creates from that is derived this what he calls a PC channel, and in order to get some of these lines, and then some other lines are added and so forth. And so the bottom line is what this tells us is that support is at this angle 2 by 0.5 line, this dashed rising horizontal. And as we go up, okay, so the expectation is price is going to continue to rise with an initial target at this B2 line. This B2 line is related to the B1 line that identified support here. Okay, then we have this, and so that line is estimated to be at around 4280. So that's the upside target, initial upside target. If we break above that decisively and close above it, then we have the potential to continue to a new high for the S&P 500. So that's a quick brief on the S&P 500. Bullish. Gold also bullish. Gold has been trying to break down through the support for a couple weeks now. It's been unable to do it, but this support zone here is connected to this support zone here and this support zone here, and the current support is also connected to this 1x3 line, angled line, as well. And so the expectation is for a similar rally. We had a nice strong rally off this support pullback. We had a nice strong rally off this support pullback. There's a relationship between those previous pullbacks and the current, as well as previous price action way back here, which is connected by the concentric circle tool here, and here the dark black, and the half circles, which is the dashed here and here. And if you go back and you look through this chart, you'll see a number of times where we had rallies, we had swing highs or swing lows that connected at one of those circles, one of any of the circles that are shown on the chart here. And this target up here for gold at 2198 is derived from the horizontal at this internal circle and the concentric circle here, the extension of the original concentric circle here to here. Anyway, it's pretty interesting and fascinating. We'll have to see what happens. It's, a big deal though if we break below the recent lows, of support on gold. Then we could have a much deeper retracement. That is not the expectation. Gold has maintained its strength, and we would look to see gold at new highs. So that's a trader for this week for the weekly technical market report for Spartan Capital Markets. Take care, everyone.